Good morning, everybody. Welcome to the Trading Market Technicals Morning Call video for Wednesday, October the 10th. Had a nice little push to the downside, all thanks to Apple. Apple did move the markets lower, no question about it, and actually recovered nicely into the close. Still down on a day, but we'll get into a chart in a moment. But if you could see here, here's a 5-minute chart just for a quick recap, guys. Yesterday we had this, 2 days ago we had this drop lower and just really didn't do much of anything, and that was Columbus Day. And then we had that little bit of movement back up. And when I tell you, I keep mentioning 15 minutes, 5, 10, 15, here marks the low. And sure enough, we broke that low. That's your cue to get short the market. And it was kind of quick, though, guys. If you really had to be on top of it, or at least had some sort of a couple of stocks that you were looking at in front of you to really get short. And then really that was it. So it was it's been short-lived, and markets either gap down and then trade lower for a little bit and then really consolidate sideways and then, of course, into the close. But nonetheless, we did have a little bit of a down day. We are in earnings season. Alcoa kicked off earnings season, and they cut their global aluminum forecast down from 6% versus 7%. So they weren't really that great. The revenues were a little bit, earnings were soft, but the revenues were okay. But we're getting now, as you remember, if you recall, FedEx, they guided lower. Now CVX came out today, said that they're guiding lower as well. So right now, this doesn't look like it's going to be a real good earnings season. Now, this could either do one of two things. We can actually sell off because of earnings, and then the markets actually, we get that sell-off that we're looking for, or this could really be it, and then we move higher. Now, no one's going to know this until we get a few more days of market action here. I do like the way the markets are starting to move and start to take shape. And again, patience here is going to be needed, especially in this type of market. But we want to see the market really confirm that we are headed lower, and or if this is it, then we want to start taking out some key resistance areas. I want to get right into the charts. I don't want to waste much time, but let's take a look at some of the indicators as well. I did have been showing you the NYMO, which is the McClellan oscillator, and again, since really July, we've just been really bouncing back around, except this oversold spike. We've been bouncing around from negative 30 really to plus 30 for the last couple of months. So really, this indicator hasn't really done much, but there is a couple of things that I want to show you, and one is copper. Copper's actually held up well today, and the NASI, which I'm going to get into that as well. Copper held up pretty well as the market actually sold off. Copper stayed right in these areas here. Now, copper's going to need to really hold this 370 area, otherwise you're going to see that 361, which is the 200-day moving average, and then of course the 50 down below. But holding up well, so that's a good sign that maybe there isn't too much downside. I'm unbiased. I'm looking for what the markets are telling me, and I'm going to react to it. So, but if you look at the copper, right now, look at the Shanghai, which I like looking at. Now, yes, I look at this as an oversold bounce for the moment, but if we can get back up in this area and flag on low volume, and then start to take these areas out here, and then of course the 220, the 2200 area, then I could say, well, I think the Shanghai is actually looking to catch a little bit of a bid, and we are looking to move higher. Okay, now the NASI weekly, we are on a sell signal, as you can see here. This is a weekly chart, and it's pretty active, guys. This is something that you really don't want to ignore. This sell signal is active, and we'll see what happens at the end of the week. But I didn't show this to you on Monday, and yesterday, obviously, we didn't have a video because there was really not much going on. But I wanted to get this out to you to look at it. The NASI is on a sell signal, rightfully so. Obviously, as you know, Apple had that head and shoulders pattern that we're looking at, and I'll get into that as well. So this is on a sell signal. Let's take a look at the VIX. Now, the VIX has been chopping around here since basically March, right? We broke back out here, and now we're at 16, 17. We really need to get above this pivotal high right here, which is going to be 19. 19 and hold for a couple of days, bouncing around, chopping above this little resistance line, which would come support. then I think the extra volatility would step into the markets, and we probably have another push lower. But that's something that I'm watching. Now that the VIX actually woke up, I'm going to start keeping an eye on what the VIX is doing. Okay. Now I'd like to look at the dollar. As you know, dollar is a key driver of what this market does. Dollar up, we have market weakness, commodity weakness. Okay. Dollar down, obviously commodities, equities up. So we really need to pay attention to what the dollar is doing. We had this wedge. We broke down hard, formed another steep wedge. We flagged. We broke down, and now we're just kind of chopping around from 79.50 to, let's call it 80, right? We're just sitting right here, but we have a large engulfing candle. Remember, everything does not go straight up or straight down. So even if the market, even if the U.S. dollar wants to rally right up in this area, this area of resistance, which the 50 and the 200-day moving average, you're still going to get an additional push lower, maybe 1 or 2% in the S&P. So really keep an eye on the dollar. And I want to show you the weekly chart here. The weekly looks actually more bearish, bullish for the market. Could be setting up for a nice big head and shoulders pattern. Who knows? Head, left shoulder, and setting up the right shoulder. You want to make sure when you're looking at technical analysis, you cover all angles. So if you have a mixed signals, you want to wait for one of them to start working out and, of course, to trigger, okay? So right now, this is just telling us really that we have support here at the 78, which would be the neckline if we can develop a little bit more. If we could kind of bounce around here a little bit more, this could be setting up for a really big weekly head and shoulders pattern to the downside, which, as you know, is bearish. So let's just keep an eye on, but I want to show you the daily chart again. Daily, again, guys, right up in this area here, a break above this and hold, you're going to take a run for the highs. And I think a lot of the commodity sector will start to lose its luster if that does happen. Right now, it hasn't done so. We need to really take out 80, and then, of course, 80, 70, really get above 81. But we have this confluence area of resistance, so that's going to take a little time. All right, let's get to the charts now. I mentioned here, I said, okay, if you recall last week, we had the S&P 15-minute. I had the head and shoulders, right, the head, left shoulder. And then, of course, here was the right shoulder, and then here's the neckline. Well, we popped out of that symmetrical triangle, and we actually had this little flag pattern. I left it here because I always like to look at what's happening. And now we're back down to this area here. So, can this be a head and shoulders? I like to see the right shoulder really lowered. Not that it can't be. But I'm just going to really right now look at this as a failed breakout, a failed symmetrical triangle breakout for now. Let's see where this thing goes. But we do have support at the 143.44. Call it 143.40 if you will. If we break this, look at the volume profiles. And if you look here, we have a thin zone right here. So this would easily... If we break this 143.40, we're going to break down to this area here, probably 140, 144 to 140. So I would definitely make notations for your levels. If you're looking at the spiders, I love looking at the spiders, nice and clean, as well as the minis. Take a look at the euro. Well, we had that bear flag. If you remember, I said, okay, guys, looks like a real bear flag. Bear flag. We broke out the next day, and we just failed. So that bear flag is actually now has broken out. We did catch the 200-day moving average on the daily chart as FXE, which is the ETF for the euro. But nonetheless, it looks pretty ugly. We have euro weakness. You're going to have dollar strength. Okay, there's no question about it. So, and if you guys are looking at the euro itself, the spot, or if you're looking at the euro dollar, the pair itself, that's fine as well. But I'd be looking at further weakness in the euro. If this euro, if we close below the 200-day moving average, I definitely see further weakness in the market, which is actually okay because if we want to be looking to buy seasonal strength into the holidays. So that's what I'm really looking for. Okay, now look at this IWM chart. Ugly, ugly, ugly. And I left this head and shoulders pattern here. If you recall, I took the other ones off on the spiders because it looked more of a symmetrical triangle where this actually looked like a head and shoulder, and sure enough, it really is a head and shoulders, and I'm keeping that pattern as is. We have a nice little bear flag back. Usually they flag into the neckline, which has transpired, and now we're breaking down here hard. Risk definitely off, no question about it. Distribution days here, so and obviously today that Monday was Columbus Day, so that's why we had that low volume day. But definitely distribution days, risk coming off the markets, no question. So keep an eye on the IWMs. If anybody does trade it, I would definitely use caution. And look at again the transportation sector, the IYT. As you can see here, I said this just probably would be at the very least an oversold bounce, and sure enough, that's what we had off this bullish falling wedge. Sloppy. I don't like the way it's really not symmetrical, but we'll call it that. It did bounce up, and we had this confluence area of resistance. We had the 20 to 15 way up here's the 200-day. Big engulfing red candle. Took out the last 2 days. Not pretty. Not pretty at all. This market could definitely have a little more downside, guys. No question about it. Look at the SMHs. The semiconductor index just got decimated from this little pennant formation. Failed breakout back here, back on Friday, Monday, Tuesday today, yesterday. Big move lower. So not looking pretty here. Risk off. Now, we could have sector rotation. Money could still be in the markets, and that's fine. If money's coming out of these higher risk areas, technology, consumer discretionary, if you will, and running into healthcare, utilities, high dividend yield stocks such as the REITs, a lot of the builders, not the builders, but the REITs itself, that a lot of the malls that pay a high yield. That is something that is fine as well, long as the money stays in the market. Not if they start selling good quality investments to pay for their losses, then you're going to have a full-fledged sell-off. Right now, we don't have that, but we want to really pay attention to that. Okay, now let's take a look at Apple. If you recall, I had this this long-term uptrend line right to the penny, literally right to the penny. Head and shoulders pattern here, guys, and I just want to let me get that neckline out right in here, and sure enough, we broke down from the neckline. And now we had a nice big bounce from this low of 623, closed right around that 634-ish area. But we do have a little bit of a bounce, nice big hammer today. So that's a clear reversal. Let's see where Apple goes now. Again, I'm not really a really big trader in Apple. I do like to trade the options if I'm going to do something with Apple, just a little bit more easy to manage risk. But look at the clearly distribution days here. So that's why the Qs got smacked today and the last few days. Big distribution every day since the last 4 days. But we do have a reversal candle. Let's see if they gap them up and if it holds. If it could hold, like I mentioned last week, it needs to get to that 20-day. And sure enough, it barely got to it and reversed. So there is definitely distribution going on in Apple, which is not good because it's highly weighted in a lot of the sectors, a lot of the indices. Okay, take a look at the Qs. The last one, look at how the Qs got decimated today. And look at that volume. Really ugly chart. Bear flag, broke below the 50-day moving average, below the 20. And when that happens, tomorrow we need to regain this with a large engulfing candle, a large engulfing green candle. If that doesn't happen, it's usually a magnet that we're going to get to that 50-day moving average. And if that happens, as you know, Apple will sell off as well as the market. So let's keep in mind, let's keep our palates dry here. Very excited. Lots of volatility stepping up to the plate here. There's going to be a lot of action coming in a few days and weeks ahead. So really, you want to be nimble. Cash is a position right now and just wait out the best setups you can. But when this market starts to move, guys, it's going to be very busy and very active, which I'm going to be very excited about. All right, guys. Oh, one other thing, too. Coal sector. Watch that coal. ACI, ANR, WLT. The coal sector looked really good. And obviously, oil with what's going on, political uncertainty out in the Far East, out in the Middle East. Keep an eye on that. We have a couple of small little trades, LEI, KWK, a lot of those smaller cap oil plays are starting to move. You might want to do a scan and take a look at that because there's some opportunity out there as well. Okay? All right, guys, have a great day, everybody, and we'll talk to you tomorrow. Take care.